So traders, so once again we have come to an end after a pretty volatile week, a week where Nifty made a high of almost 26,050 thereabouts, or just a bit lower than that, and a low of 25,750, opened close to 25,927 and closed I think at 25,966. So कहाँ गए, कहीं भी नहीं गए, वापस घर पे आ गए. So it was a pretty active week of volatile trading sessions, and again we have closed just above the open. So let's analyze what has happened this week. First, in terms of trend, I would say that the trend is still up in the weekly time frame charts. So the trend is fine. The momentum in the weekly time frame charts for the Nifty spot is okay, not bad, but it's not that great. The reason for that is in the last 3 weeks, we have seen 3 candles. All 3 candles have lower wicks, which is a good sign, obviously, as we are not able to close below the 23.6% Fibonacci retracement on closing basis, on a weekly closing basis, which is a good sign, but price is not advancing. Now in the daily time frame charts, you will see the price action is pretty choppy. Over here it was smooth, pullback, again up, and then after that we have been just chopping around. Consistently the range is getting smaller and smaller and smaller, and it is getting difficult to find good trades. The reason for that is that the distance between the highs and the lows is decreasing. In terms of trend, I would say I think 2 days the trend is down, then after that suddenly there is a pullback. Suddenly we are over here, and then it feels that if this level is broken, then we'll move probably on the downside. वहां से Nifty घूम जाता है, and then again today we have a pretty decent pullback where Nifty has been able to close above just 0.5%. So now in case if Nifty wants to move higher, I'll give one hint. See, generally before a breakout in price, the breakout in RSI will always be evident. What you can do is you can just take a trend line, you can just drop it like this. So far you cannot see any trend line breakout in RSI. In case if you see any trend line breakout in RSI, that is the first sign. Probably, maybe, I'm using the word probably, maybe एक breakout आ सकता है. Probably a breakout can come. But always understand, in terms of importance, price is more important than RSI. So if RSI gives a breakout, at least we need to see Nifty spot trading above 2660 or 26100. That's the minimum thing. Why? Because we need Nifty to surpass this previous short-term high, which was made, I think, 5 days back, 5 to 6 days back, nothing more than that. I'm just asking that much. Once we close above this, then we need to see sustained buying. Then I think things can improve. So this is the minimum requirement by Nifty to show some sort of positivity on the upside. Bank Nifty. Now Bank Nifty, I should say, in terms of strength, trend is up in the weekly time frame charts. No problem about that. The momentum is also fine, but again, if you see the candles, what has happened is we have seen buying at lower levels, but we cannot see any big green candles and any price advancement in Bank Nifty on the upside. Just like Nifty, we have seen a very good momentum here from the start to the end of November. As soon as December started, you can see pretty much choppy environment in Bank Nifty. Even over here, the range is getting smaller and smaller. So this makes, I think, life difficult for directional traders to make money. We have been able to safeguard ourselves by closing below 58,630, 635, which is a 50% retracement of this entire bull run, which occurred from early November to early December. This was a 1 month rally, sort of 1 month rally. Good sign, no problem about that. But if you want to go higher, if you want to continue to go higher, so at least ye jo high hai 59,550, we need to close above that, sustain above that, and we need to see sustained buying. What is happening these days is one day the market is up and suddenly we feel encouraged, maybe things are improving, then suddenly market is down, and then we say that if market closes below this, then a breakdown. This can happen in choppy market environments. ये होता ही है. We cannot do anything about it. What we can do maximum is trade less and protect ourselves, basically, which I generally share in my final message. But as per analytical part is concerned, we need to trade above this high, which is 59,550 on a closing basis level, and we need to see sustained buying. Closing basis and then sustained buying in the next few days. Then maybe Bank Nifty has a chance to go up higher. PSU banking space. PSU banking space in terms of trend and momentum in the weekly time frame chart, I should say things are fine, things are okay. Weekly time frame chart is also good. Daily time frame chart seems to be improving slowly and steadily. Trend is okay, I should say, not that great. Yes, price is going up, but in comparison to the price going up and the trend, I think momentum is improving pretty nicely, which is a good sign. This one thing, if you are a person who's trading the PSU banking space stocks, keep your trades for short term, in the sense for few days. Do not keep for medium term or anything, because if you check the monthly time frame chart of the PSU banking space, you will see that it is slightly overstretched. So any trades in PSU banking space on the long side should be short term oriented for swing traders or momentum traders, and again, do not have a blanket view. There are few stocks in the PSU banking space where you will see some sort of distribution happening on the higher levels. So avoid those stocks and try to participate only in stocks which are looking pretty good. Okay. So be stock specific, basically. That's what I'm trying to say. Private banking space. Now, private banking space is making our life difficult, but by not participating in the market on the upside. Although the structure seems to be fine, trend is fine, momentum is fine in the weekly time frame chart. Daily time frame chart, I should say that the good part is that we have not been able to close below the 50% retracement, which is 28,300. We went below that. We traded below it almost yesterday, but we closed higher than that. Today also we can see a doji candlestick over here. Now, is this any sort of bottom out formation or something like that? My answer is no. There is no bottom out formation over here. Only thing is that we have been able to bounce back from this 50% retracement. Generally 50% retracement is an important support. Not necessarily wahan se bottom out hi hoga, but it is an important support. Now going ahead, next few days we need to see that after this bounce back, does the private banking space consolidate, or does it directly start going up on the upside very fast? That is what will be very, very important in the next few days. Oil and gas. Now in oil and gas space, if you have a look at the weekly time frame chart, you will see, oh, it's amazing. I can understand when you can see such a big rally. You can see a retracement getting over at 38.2% retracement. This is a good sign. This is a good sign. This is a sign of strength. Momentum is also fine. The structure of the daily time frame charts in the, I think till this particular date, I think till 15th of December, things were fine. And in the last 3 days, again, things started becoming discouraging because we had a gap down and then the sector started going sideways. Today, again, we have a gap up and the prices have gone up. Now, this is something which is, which takes away clarity. Because when we can see that there is a lack of clarity, there is a lack of participation, suddenly there is a gap up and then a big green candle, the entire view changes and we start seeing it as a bullish sector. Is it a bullish sector as per the sectoral indices chart? The answer is it's okay. It's improving in the daily time frame chart. Weekly is fine, but the daily time frame chart is improving. But if you see to the constituents, because aap index trade nahi karne wale ho, you're going to trade the stocks within that sector. So if you check the stocks within that sector, you will realize, you will understand that not all the stocks are participating. Within 6 to 7 or 8 important stocks, you will see 2 to 3 which are actually trying to participate on the upside. So be very, very selective in this particular sector. Autopack. Autopack today, yes, we have a big green candle. It will be looking good on charts. We have a big hammer, a big green candle. All these things are good. I can understand. In fact, even if you plot a Fibonacci retracement, it will look good. I can understand that. But again, as I've always told, that I am a trader who trades along with trend, who trades momentum. So if you have a look at the sectoral chart, you will notice that the trend is there, but the momentum is missing. The way prices was advancing over here, I would like to participate in this market and try to avoid these sort of markets. These sort of markets may give you few bounce back, but they will also take away a lot of profitability because they will also give you a lot of choppy trades. You will see such decent trades, but you will also see some choppy trades. So it's a mixed bag. So as a trader, I would like to avoid auto pack. Yes, there are one or two stocks. So if it is a compulsion for you, if you want to go for the auto pack for the bullish trades, try to select stocks which are showing signs of positive trend and positive momentum in the higher time frame. Consumer durables. Now, consumer durables, last week we had very big hammer. This week we have a green candle, but we have a wick on the upside, which shows signs that some sort of selling pressure is evident on the upside. In terms of trend and momentum, I should say it's negative. Trend is also negative, momentum is also negative, and even in the daily time frame chart, so far, despite this positive divergence, I should say that the sector is negative, and this is just a pullback and nothing more than that. Nothing more than that. It's a weak sector basically. Consumption pack. Consumption pack last 2 weeks. There are two things over here. First is the structure. Structure in the sense what trend. Trend was slowly and steadily. I'm using the word slowly and steadily. It was getting deteriorated. Why deteriorated? Because you can see these lows. We consistently had higher highs, higher lows. Suddenly we had a low, we had a high which was lower, and then we had a low which was lower. So as per Dow theory, things were deteriorating, things were bad. Momentum was also getting affected on the downside, so things were bad. But suddenly what has happened is this 127.20% Fibonacci extension has worked pretty decently as a support, and prices are trying to bounce back. In fact, we also have a gap over here, a weekly gap, which is not allowing the prices in the consumption sector to go down, and it's trying to help it go on the upside. Now, we can see that this is a candlestick which is bullish. It's a hammer, and we have a bullish bell tool. Just because it's a big gap on the downside over here and it's helping the prices to go up ahead, should I say that this sector is positive? The answer is no. I can only say that the sector is positive if I see an uptrend along with momentum. I would want to trade these sort of moves and not these choppy moves. I would like to stay away. So if I have the clarity that the prices are trying to bounce back from here, fine, I'll accept it. But once I see some positive trend momentum in the weekly time frame chart, only then I will trade the lower time frame chart, which is the daily chart. Otherwise, I'll stay put. That's it. Simple as that. You should have absolute clarity what you want to do. Finance pack. Finance pack as a sector, in terms of structure, I would say trend is up, no doubt. Momentum is up, no doubt. Consistently, in the last 3 weeks, we are seeing candles which are seeing lower wicks. In the sense, if it has lower wicks, some sort of buying is happening at the lower level. This is a average support, not that great support. The good support was in this zone from 27,271 to 27,390. Unfortunately, we did not, sustain within it. We closed below it. Then we opened gap down. Okay. Again, we closed below it the previous day, which is yesterday. And then today we closed above that support back over here. So it's difficult to say as of now. It's very, very difficult to say whether things are getting better, whether it is a bottom out or not, because no such candle is evident. Only one thing I can say, you can use RSI, keep a trend line here, and see if we have a follow through move on the upside, which takes away this previous move, which is 27,715. If this is taken off, closing basis, and then we have sustained move on the upside, then maybe things are changing. Because it's always better. in an uptrend, I don't want to be early. मुझे जल्दी नहीं अंदर entry लेना trend में. I am okay to take late entry, but I want to take entry in quality moves when prices are advancing on the upside, not just with the trend, with the momentum, and they should be moving up faster. Make money faster and get out of the market. Simple. That's the idea basically. FMCG. Now, FMCG as a sector, it is trading in the multi-month consolidation phase where whenever it hits this low, there is a sort of buying which pushes the prices on the upside and there is a serious pullback. And this is happening since multiple months now. And this is a sector which has pretty decent heavyweight stocks like ITC, Hindustan Unilever. Now what has happened here is in the last few days or last week itself, there were many candles which showed characteristics where they had lower wicks. So possibility was कि शायद sector ऊपर pullback देगा, which it did. Sector ने ऊपर pullback भी दिया, but till the time I think 55,400 to 54 I should say 800, 54,800 to 55,400. Until and unless this level is not taken off, it's not going to be easy for the prices for the FMCG pack to go higher because this entire zone is working as a strong resistance back. Mind that. Okay. IT pack. IT pack continues to remain bullish. The trend and momentum in the weekly time frame chart are positive. The next upcoming resistance in the IT pack is close to just below or just at 39,600 or 39,595, 885, somewhere around that. So we have a little bit of, I think, room left on the upside, but as a trader, as a short-term trader, I would like to trail my stop losses because I think we will be testing that particular resistance band, resistance level pretty soon. Today we had a candle which showed like higher opening and then we closed lower. That is okay, but overall structure, trend and momentum continues to stay positive, no problem. Infra pack. Infra pack, last 2 weeks we have seen consistent buying happening at the lower levels. In fact, the 1st of December over here, this particular week, if I should say, it has a lower wick. Then the last week has a tremendous amount of lower wick. This week also we had a lower wick. So if you just keep away the daily time frame chart apart, thoda dur rakh dijiye. If you just watch the weekly time frame chart, you will clearly understand that the trend and momentum is up. RSI is also okay. This is just a short-term pullback, just a short-term pullback. In the daily time frame chart also, things are trying to improve. मैं ये नहीं बोल रहा हूँ. I'm not trying to say that things are completely improved and things are fine. No, they started to improve, and then in the last 3 trading sessions we had a choppy move, which disturbed everything, which distorted the entire chart. Today again, this particular sector has been able to close in positive, just less than 1%, 0.99% up, which is a good sign. The candle is also good. So if we closed above the highs of the last 4-5 days or 6 days, then maybe things can improve. And after closing above that level, we should see continuous buying happening, follow through buying happening basically. Metal pack, I should say in the weekly time frame chart, trend is good. It's nice. Momentum is missing, although in the weekly time frame chart, which needs to improve, which I think will happen in the next few days. Daily time frame chart, the first breakout did occur, fine. Pullbacks yet not visible. Volatility is trying to shrink, that's okay, but until and unless there is no momentum visible in the weekly time frame chart, it will be difficult to pick up trades on the metal sector. Overall, it's a bullish looking sector. It is certainly not bearish, but as a trader, you will need to understand that you'll have to wait a little bit with patience before you jump into the sector. Now, the next one is Pharma pack. This is tricky. Tricky in the sense is, I mean, the trend is up, momentum is also up, no problem. You can see RSI looking fine, but the sector does not go up consistently along with the speed, just like IT did. IT took a U-turn, it completed its downtrend and reversed and then kept on going up. Pharma pack on the other hand took a U-turn and it's like, it's very slow, very slow. In fact, it's lower than this because over here at least we are making higher highs, higher lows. Over here you can see last many days we are making lows at the same level. So this is not good. The trend and momentum is positive, but we need to see much more than this what is happening in the pharma pack if you want to see it as an outperforming sector. PSE sector, there are two things: trend down or up, down in the weekly time frame chart, momentum down. But last 2 weeks we have a candle which is hammer, pretty good hammer. Also, this is a 2% Fibonacci extension below which the price is not ready to close. It's not ready to close, and we are trying to give a pullback on the upside. Fine, it's a good sign. But is it tradable? Should we be trading just because we have two big hammers in the weekly time frame chart? The answer is no, because the sector is weak, and even if the price goes higher, it's just going to be a pullback. And I'm not a person who will buy anything which bounces back from the bottom on the upside when that particular sector or stock is in a downtrend. Got it? Realty pack. Realty pack, again, the structure is bad. Trend is down, momentum is down in the weekly time frame chart. Last couple of weeks candles are looking extremely bullish. In fact, I should say this week's candle is a dragonfly doji, sort of a dragonfly doji. Now, my friends, dragonfly doji is one sort of candle which generally comes up very seldom, and whenever it comes, it shows us extreme amount of bullishness. So far, the daily chart is not yet that bullish. It's just showing signs of pullback from the lower level. Until and unless we do not have something concrete either in the daily or in the weekly time frame chart, it will be difficult to comment. I mean, I'm not a trader who sees anything interesting that I would like to, jump in that sector over here. I would like it to go higher, give confirmation, and then ride the trend. That's my nature. That's how I trade, and that how trading should be, because I think it's not easy to, call bottoms and tops, right? So let's wait for proper confirmation. But yeah, prices are trying to improve something. Now this is the India defense pack. Trend is down. You can see prices are down. Momentum is also down. The RSI is down. And there are two hammers, back to back, two sort of hammers with extreme lower wicks, which is trying to improve. Now you can see that we have dragonfly doji here yesterday, and then we have a big bullish belt hold. Are we going to pull back? It's very difficult to say. Seeing today's price action, seeing yesterday's price action, it seems that maybe we will pull back. Now, is this tradable? Again, just like last previous sector, which was the realty sector, I'm not a person who will try to pick up bottom. I'll let it go. So if you are a trader who had probably, used stocks in the India defense part on the short side in derivatives trade, probably you should think of, trailing your stops pretty tightly. But if you do not have any sort of trades in this particular sector, stay put, avoid, let some clarity come back, and then you will re-enter this sector. It's better to, be late rather than pick bottoms and have absolute no clarity about the market. All right. Mid-cap space. Mid-cap space, I think over here we have a very big hammer in the last 2 weeks. We have been able to bounce back from the 50% retracement. After the bounce back, the initial movement was good. Suddenly we gave away all the gains, almost all the gains till yesterday's low, and then suddenly we have been able to bounce back. Fine, it's a good sign, but the overall overall volatility is very high. In the sense, I'm saying in the last 6 days, 8 days, the mid-cap markets have moved so much. Like from this bottom, it went up, shot high, came down all the way here, and then again it's going up. So a trader would like to see more, less volatile markets where the trend momentum is supporting in the higher time frame charts. But these sort of movements where there is sudden move, I think that is something which not everyone will certainly like. Okay. So as a trader, you should be pretty careful when you are picking up stocks from the mid cap, and see to it that the volatility is low when you pick stocks from the mid caps list. Overall final message according to me with today's close is, yes, things are trying to improve. taking into consideration that at least we have not been able to close below 25,700, which is a good sign. We have bounced back today, again a good sign, but just like staying there, not going anywhere, it's not going to help, because if we just stay there for a very long time, I think the momentum will start sliding down even in the weekly time frame charts. So my suggestion would be, things are improving, fine, okay, good, but see to it that the prices move up at least above 26,100, close above it, sustain above it, and then if we see follow through buying, then things might improve. So stay cautiously bullish, but do not have way too many trades, opening too many trades suddenly out of nowhere. First, get the confirmation from the market and then try to initiate multiple trades. All right. So prepare nicely for the next week. Complete your weekly trading homework. Trade less and trade wisely. Thank you.